So last time we looked at moving averages and how they provide structure, support and resistance. You needed to look at Bitcoins using the daily and weekly time intervals and then try different time periods. So maybe 10-day moving average, 20-day moving average, or 10-week moving average, 20-week moving average, and kind of see which ones seem to be important. So I think with the 10-day moving average, or the 20-day moving average, that seemed to provide support for a lot of the move recently, as in the last few months, with Bitcoins. And so then you could kind of go, when the market dipped to near the 20-day moving average, you'd want to maybe buy it then with a stop loss just below, because if the trend continued, the 20 days seemed to be support. Here we're going to use Fibonacci retracements, which used to be available on DailyFX, but it seems to have disappeared. So if you go to tradingview.com, I have the URL in the description below the video. We just click on the pitchfork, which is the same as what you used to have to do on DailyFX as well. Then I click on it again, and we get a list of options. I want the Fibonacci retracement, so I just click on that. Now here there's no really set answer. Like for Fibonacci retracements, you set a low and a high, and then it tells you what the important levels are going to be, or could be. So I'm going to say that this was the recent low. So I'm just there. Then I click, move the mouse up to set I'm going to use the high there. So the candle, so I'm just going to set that and then I'll talk about it. There, I think that did it. So you see the price went up to here and then fell back. So the candle marks where the opening and closing prices were, and then the wick is how much, like where the price has been during that day, since this is a daily candle. So once you've set that, once you've done that, the Fibonacci retracement tool marks the important levels. So the typical one is 50%. So if this was the low point and then it moved all the way up here, the top of the wick there, then we'd expect that the 50% will be important. And you can see that here, that the price did stop and bounce off this level. Remember, traders at this stage would know that this was the recent high and this was the low, so it would want to kind of test the midway. Then did any of the other levels show up? Not really. Well, again, this is when it was going up. The 50%, no, this isn't the 50, sorry, it's the 61.8% retracement. That was important when the price was going up. Since at this stage, we didn't know that this was going to be a high. That's one of the joys of Fibonacci. I mean, it is very fractal. So you get patterns, you get the same ratios showing up again and again. So it went up here, it bounced off the 50%. It kind of hung around here as well, since it's not going to be exactly at that number. But you see, when it went up, it struggled with this level, fell down. This level was also as kind of support. Like when it was falling, it struggled a bit, tried to go back up, tried to go up to the 50% retracement, couldn't, fell back down to the 61.8. Was kind of unsure, tried to go up, it had crossed through the 61.8%, 61.8% support, and then was unable to go back through it. Then it fell back down here to the 78.6. And again, you can see here, when it was going up, a couple of times, you know, the candle was here, it tried to go down to the 78.6% level, but didn't manage to do so. So, you know, this level was playing a role even at this stage before it had ever gone all the way up here to set up this structure. You know, it hadn't actually ever gone up to this level, so that we didn't know back here that this was going to be an important high and this was going to be an important low. So that's the weird geometry of Fibonacci retracements. So how does that help us? Well, it's just they're important levels that they tend to be tricky to, they tend to be important, or they tend to show up for no reason. So once it's gone up here and now it's falling, you would have been looking for, okay, it's up here, will it manage to get through this level, the 23.6, because you know that's 0.236, so you can call that 23.6. It easily went through that level. In the next candle, it didn't really manage to get back up above it. So this didn't really play much of a role. It easily went through. But at the same time, it easily went through it on the upside. So, you know, this didn't seem to play that big a role. So now it falls through that, no problem. Is perhaps the 38.2% level is going to be tricky. Well, it seemed to be an area that it hung around. Like, so it went through this first level, it then even went through the 38.2, but then it went up above it. So it then did retrace a little, but it didn't make it to the 23.6 level. So it went again through the 38.2 all the way down to the 50%. Now it again went past the 38.2. So these levels, this seemed to be an area when the market was trying to decide what to do. So it went up, went down through it, and then it went, okay, I've tried going above the 50% retracement. How about going down? So it went down, Now it's down to the 61.8. It tried to go back up to the 50, but it easily went back down to the 62, hung around there a bit. So it went a little bit below, but it went back up to this level again. And then it went, nope, I'm not interested in going back up to 50. It just shot down there. Now, of course, these are levels in this region. So what value does this really add? It does seem to play a role. I mean, it's strange that it would, this is the top, you know, that it does seem to get, it does seem to gravitate to the Fibonacci levels. But it's not clear how exactly we should use it for trading. I would normally think of it as, like, say the market goes up to a very high, you know, up to this level, then it starts falling. Then you go, okay, say you believe that Bitcoins are still going to be going up, you know, that this is just a retracement, a healthy retracement, you know, it'll give us a buying opportunity. So one way to do it is to go, I'll put in an order to buy it at the 23.6. So that's the earliest retracement. So that's very likely to be hit. So, you know, I can feel pretty confident that I'll be able to pick that up. But I could get it cheaper. Normally, I don't use the 23.6 or the 0.786 levels that much. It's more about 50%, 61.8, and 38.2. So normally, if that was the top, I'd look at the recent, the low and the high, and I'd go, I'd try to buy it at a 38.2% retracement. So that's a nice discount. You know, that would be, you'd pick up some at a good level. Otherwise, you might want to buy some at the midpoint. In this case, it did fall down, and so you would get to buy it at 50%. But in many cases, you know, when you're in a strong uptrend, it goes up, 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 and you never get a chance to buy it at a lower level. So, you know, if you're too picky, if you kind of go, oh no, actually I want it at a 61.8% discount, but 8 times out of 10 maybe, and I'm just making that number up, but as in most of the time, it'll never go all the way down to 61.8. So if you have such a high standard of, oh, I wanted a super discount, you just would have missed the up move. So it'll just dip down a little bit and then keep firing ahead. So it just gives nice well-defined levels so that you can kind of go, okay, if it jumped all the way up to here, I do think that the RSI is very high now, so this is very overbought. So again, if you wanted to sell some, this is a good time to sell it. If you were looking at your RSI, then I'd be looking at the fact that the moving average is well below this, so it should be automatically attracted back to that moving average. That's the basic trend. So I do want to buy it at nearer that trend price, as opposed to paying over the odds. So I could look for a discount of 38%. That's more likely. I'll have a good chance of buying it. In this case, due to the fact that the RSI was so extreme and the fact that there were multiple signs that the price action was very extended, there was a good chance that you'd get a 50% discount. You could say this means that I should short this, when it was up here, because I think it's very extended. But it's a risky trade going against the trend. I mean, Bitcoins have been shooting up and up and up. So, if you wanted to bet against it, it could cost you a lot. So I wouldn't be very keen on, say, shorting it here, when it was way up here, because it's still above the moving average. We were still getting higher highs and higher lows. So all the signals are that the trend is up. And you don't want to bet against the trend. So I'd more be looking for opportunities to buy more at discount prices. So when it was way up here, you might be looking to buy it at 50% or 61.8. Then it's very painful as the price goes down and down and down. So maybe you'd have a stop loss at the 61.8. I don't know. That's trading. You have to make all these decisions. There are other tools, which we haven't talked about yet. So next time we're going to look at candlesticks. See you then. Oh, and sorry, if you have any questions, remember to just put them in the comments below the videos. Then we can come back to those. Thanks.